Hello everyone. Right, let me get this link shared out. Give people a couple minutes to get in here. Share it on Twitter and in the Discord. All right. Well, my plan for this live stream is to just chart the Bitcoin chart here from scratch. We're going to start on the highest time frames, and we'll organize everything here by time frame. So let's just start on the monthly chart. We're going to start with just horizontal levels, major levels. I was going to do this on my own, and then I thought, you know what, I'll just do this on live stream. So we're going to start by just marking out our monthly candles, highs and lows. And here we can just, we'll just put 2, although we know there's 1, 2, 3, 4 monthly candle highs here now. And I'm going to mark this out as old all-time high, and I'm going to put it on in this folder. And I don't think it's too relevant to mark out this one here. Just to have it, we could mark out the next monthly candle to the downside as well. In this time frame, let's put our major fib levels as well. Just pulling low to high, our 382. We could maybe put on our 2, 2, 3, 7. It's just a minor fib, but let's leave it off. And what I'm going to do is I'm going to actually toss all of these into a folder. And we're going to turn everything back on later, but we just want to have the levels marked out. Also going to pull a volume profile across all of this. I'm going to mark this out as POC. And we're going to come back and look at this in a moment. I will note locally here, I'm in a long that just barely dodged a stop here. We do have some local bullish divergences forming, but we're going to get into the local ideas shortly. What I want to do is just challenge any of the biases I have. I'm going to drop, and right now my biases lean bullish, certainly. I'm not going to mark this out as a month or weekly candle because it's a monthly candle low. And let's just make this blue. We're also going to pull, I'm going to start pulling trending price action and channeling price action. And on this time frame, let's pull these fibs locally. I might end up pulling these twice. Just double checking I'm on the right screen. I am indeed. All right. And I'm actually going to pull the... So this is just being aware of all of the major structures on the chart. That's the goal here. Go to the daily time frame now. I'm just going to mark this out as one. We know there's 2 daily candles here. I'm not going to mark out the developing daily candle. And what I'm doing is I'm just marking out the untapped candles here. Same thing here. What I'm going to do is I'm just going to mark out the bottom one, and just for some reference here, I'm going to highlight the zone. Let's fade this a little bit. Let's get rid of the border maybe. Just to say that there are a series of daily candles in here. For me personally, I will remember that they're stacked daily candles. We don't necessarily need to mark this, but I will, and I'm going to do the same thing. Just marking out that there's stacked daily candles in this highlighted zone from this candle to this candle. But I'm not going to, it's just going to get too messy if I try to mark out every single one. I think what I'm going to do is I'm going to pull these fibs. So it's quite a clean bounce off the 382 twice here. It can be quite a bullish idea, but I'm not going to draw any conclusions here. I already know that I'm bullish. Daily time frame. All right. We also are going to pull, I'm just going to pull the volume profile across the daily time frame here. You know what? Let's just make these red. Mark out the value areas of the range. And we're going to just drop those into the daily time frames as well. We're going to be refining some of this. Right now we're just marking out levels. Let's put the idea of a range here within the daily chart as well. We have to drop it somewhere. Technically this range exists on the weekly chart as well, but I think it's perfectly fine to sit inside the daily time frames folder. So if we turn on everything right now, we start to see pretty messy chart. Now there is, I know this exists. It might just take me a second to pull it here. There is an ascending channel here that I just want to say it comes from this pivot high that I do want to have. Let me clean it up. I do want to have it on my chart. Probably just keep that in the daily time frame as well. Actually, just to make sure it's perfectly pulled. Let's, what the hell just happened there? Let's just snap it. To the levels and extend it. That looks okay. And just bring up the channel a little bit more here. We'll keep this in the daily time frame as well. All right, let's come down into the 4-hour chart. And let's just get a frame of reference for just the local structure here. This is about a 1-month range that we've been in. I think somewhat surprisingly, with these highs so close, the price has found a way to range here for another month within a 100-day range here. And where did this volume profile get dropped? Let's just drop this in here, I suppose. All right. Suppose we should pull our 786 and our 886. This is pretty much just a horizontal range at this point. It's hard to establish any kind of solid ideas at this point for trending structure. You have trending structure down here, of course. We can pull something like this and imagine what that might look like, but probably makes sense. I don't think the levels are really going to change here too much. You end up kind of looking at the same levels for weeks at this point. All right, let's drop the 886 off here. So let's be aware of this intersection here around June 17th. We are going to zoom back out in a second. we might just stare at the charts for a little while. If you're in the Discord, feel free to drop some charts and ping me if you have some ideas that you think I should look at. I'll be happy to do that. I do want to pull, I'm just going to do it in this 4-hour time frame. I want to pull some extensions as well. Again, we're going to have some overlapping with the levels, but what I want to do is just be able to turn on the levels that are kind of relevant here. And even though some of these levels are re-pulled twice in the daily time frames, I just want to have them on these lower time frames as well. Let's go 1. All right, so this is a trend-based fib extension. Low, high, low. Looking at where that 1618 comes in. And we're going to do the trend-based to the downside. Well, let's put the 1-to-1 extension in here as well. Yes, okay, so somebody, I'm just checking chat really quick. Somebody's asking how's CBD looking. Not just somebody. Love X Luck, a Discord member. Why my computer's lagging for some reason. I mean, yeah, this is arguably a bullish divergence on local and higher time frames. But these have been intact again for a while. And at some point, it's hard to, you know, these local divergences are clean. We rarely have been getting at the highs bearish divergences. We've got them within the context of downtrends. We did have quite a big bearish divergence here on our first test of 72K. And arguably here's a bit of a divergence forming. But yeah, we didn't get any bearish divergences really up here, although some aggressive longs getting absorbed. But anyways, I'd just say that it's hard not to classify this as a bullish divergence into a bullish divergence on several time frames, but we'll see what happens here. All right. I want to just pull this range. And I want to, and I'll probably just delete this and reopen those other folders soon. And we'll pull this 382 here. So if we go out into the higher time frames, obviously, we should probably mark out this value area high as well, which we did bounce off of. Obviously, we've been in a strong uptrend since 2022. And here we've just been consolidating for several months up at all-time highs. It's hard to say that this and this have the same look as far as previous all-time highs. You know, when I look at this price action, I struggle not to just see this as a range forming, a deviation under the lows of the range, price running up towards the highs of the range, and now we're just consolidating above the middle of the range, which technically should be bullish in terms of ranges. You should be looking for a rotation to the highs of the range. There's no reason not to be, in my view. But we're at our third range low retest here on the daily time frame, which coincides with the 382, and it's close to the point of control, which has shifted a little bit over the last week. Our point of control was aligned a little bit lower around this high and this low. It's now shifted a little bit higher. Obviously, the bearish case here would be, well, we flip the middle of the range into resistance from a range perspective. You know, back when the point of control was hovering around here, I just said that, you know, for me, as long as price is trading above this point of control, I want to have longs, right? I made a video on that here. I think that's still true, and I could add to that as long as price is trading above the middle of the range, as long as, you know, so on, so on. And the question is, and I think where you could really end up getting chopped up with a bullish bias towards all-time highs, even if this, even if these levels hold, is if your primary thesis is a rotation towards all-time highs, well, why not trade into that idea, right? But of course, that can get kind of dangerous from getting from a chopped up perspective if we keep ranging here for another month, right? But at some point, you expect the range to break, whether that's up or down. And so the question would be if you want to trade into trending price action locally whenever it forms. Now, what would a major rejection look like from here? We break down the middle of the range. We obviously know, I'm actually going to just pull this separately. We obviously know that there's a major GP under this daily candle low. It's not really a crazy idea to come and take all these lows and then have a bullish outcome. Although I would just say that it's quite hard to justify waiting for this low to get taken. The middle of the range, the point of control, no established lows, bullish divergences. And part of my part of my thought process here is, what are the reasonable decisions, right? I mention this almost on every live stream, and I talk about it a fair amount, is you can get really caught up in feeling like it's a game of making the right decision versus the wrong decision, and classifying right decision as winning trades and wrong decision as losing trades. But in a game of probabilities, that's not how it works at all. And you know, I'm not going to hammer on this because all of you are all too familiar with this idea, but it's just the same thing as betting on a asymmetric coin flip, right? Whether it's you're getting paid twice as much if it lands on heads or it's a weighted coin. You just bet on the heads every time, and you know that sometimes you're going to lose, but you've never made the wrong decision. You've always made the reasonable decision, which is betting on the EV positive outcome there, which is, hey, 50-50, I get paid twice as much if it lands on heads. We'll just always land on bet heads, even though I know sometimes it will land on tails. And so I guess the metaphor here would be, at some point, you just want to make sure that you haven't found a way to start betting on tails, right? So what are the justifications? Well, first, I would be super interested who's bearish and who's bullish here. Who's expecting lower and who's expecting higher from here? I would like to get like a general sense of where people's and not that you know what will happen, but just kind of where your underlying perspective is here, if anyone cares to answer. Because I'm not necessarily trying to invalidate the idea of going lower. That could happen. What I'm trying to work through here is the idea of being long before we go lower. Is that a reasonable decision? And I can kind of work through that logically and decide whether or not that's the bet on heads or tails. Is it a reasonable idea? And I kind of already know all my reasons, but maybe it's good to walk through them again. And in the meantime, I'll wait for a few answers to come in. Let's just put in all of these and just kind of zoom out and see what happens here. It's going to be tough to make sense of some of this. We have some of these levels pulled on all of the time frames. But let's I can clean this up. Let's just see. So we have, you know, weekly candles and daily candles down here. We have a channel that got completely untethered from whatever the heck this was. The other thing I want to do is get onto log scale as well. And I might do that. You know what? Let's just get rid of this channel for now. Let's just keep an eye on the horizontals. All right, so where do the levels start really stacking up here? Well, your eye is kind of drawn to this level, which I actually know there's some other interesting ideas there. Like if this is an A, B, C, and we have an extended C, I guess for local extensions, could put the 1618 there as well. This is sort of a very free-flowing session here. It's going to really hone in. I'm going to zoom out in a second and clear these charts. Yeah, so of course, an important bearish idea here is, of course, flipping. You know, maybe we bounce from this major GP, a nice clean level. Certainly going to be a lot of people watching this low to get taken. But then we flip the POC, middle of the range area, and come back down and retest the lows of the range. Take out all of these levels. Lots of levels aligned at the range low retest there. And I would certainly be willing to change my perspective if we start flipping the middle of this range into resistance. This being a critical liquidity grab idea, but then you need to see the signs of strength and reclaiming this quickly. If you start rejecting from here, well then, like I would say this little void in here, probably no levels around here. Like if you lose this, gotta kind of expect this to happen and run that low. All right, I'm just gonna read through really quickly. Someone says lower. We have lower, higher, lower, higher, higher, higher. I don't know what that means. Maybe it's higher. Someone's long, but they feel lower, lower. It's about even. Someone's asking, what do I look at when I stack them all together here? You could just say confluences, right? It's like maybe you see a bunch of levels stacked together. For example, like there's so many ways to look at this here. You could look at it as a 4-hour range. This is the range low. It's also the 382 of the move. And typically a strong move off the 382 holding in an uptrend could be considered a stronger trend and a strong idea. You also could just call this the middle of the range. And if you expand the range and don't call this a deviation, then I suppose you could say we front run the middle, but I prefer to look at that as a deviation of the range. We also know that it shifted a little bit, but this was our point of control, and at the very least it's a high volume area of the last 100 days. And so the idea here would just be that, you know, where are all the major levels stacked up? There certainly are a lot of major levels stacked up here. It's a horizontal resistance to support, a little choppy in here, but yeah, just a lot of levels stacked up here. So my case for being bullish here would be, well, structural. And again, it's not really bullish in the sense that this level can't break down, but the idea would just be that, I mean, there's lots of levels here, but while price is holding all of this up, it makes sense to be long. And if it's breaking it down, it makes sense to be short. So, but where things could kind of get iffy here is if this starts happening, you decide if you want to start longing into the uptrend and not just longing at the lows, targeting into these highs. So maybe you have several longs running. But then the thesis for being long, even if this happens again, doesn't really change, right? You still would just want to be long from the lows again. And at some point, you know, if we ranged here for another month, even if you eventually break out, if you're finding a lot of your longs into the uptrend locally, certainly a lot of opportunities to get chopped up, unless you're very aggressive about removing your risk, right? Because even if a trade ultimately doesn't work, if you trade the lower time frames and you pull that risk out very quickly, and maybe that's the play on anything taken into the trending price action, just needs to be de-risked quickly and just hold the major levels for swings. You know, I think about back here, and this in some ways this looks way worse to trade. Like super choppy uptrend with big wicks. But this ultimately was very easy to trade, and you know, was able to stack longs into this uptrend, take profits right at the sweep of the old all-time high, 69K. Was able to find a short here, and then even here, with this big wick, was able to find clean longs that held all the way up into this move. And ultimately, price did end up making a series of higher lows. But you could imagine so many cases where this ended up filling, right? I mean, this kind of looks scary to long into all of this chop, because at any moment that's coming. But order flow supported the idea so well. There's actually some very clean, just technical interactions in here. And yeah, I did really well longing into this. And then ultimately, I found the short right at 73K. And all of this was super technical, super clean. But very choppy trending price action. And so the question is here, because I would argue that order flows is sort of supporting the idea of trading these similarly. I'm not saying it would play out exactly the same, but even say if price starts trending up, do you add to longs on retracements or not? You start trading those lower time frame trending moves off this level. From an order flow perspective, we'll look at BlackRock and Bybit. So obviously, I pointed this out the other day. Very aggressive selling on BlackRock. I mean, you can question the actionability of bullish divergences on this level or on this time frame, but I would actually I would just argue that they're relevant, but maybe not for your entry. Like, you still maybe want to have technical entries, but maybe be wary of massive bullish divergences forming. And here on BlackRock, even on these lower time frames, but they've been forming all throughout this local uptrend, that maybe it wouldn't be so surprising to see a big move come out of this. But this order flow on BlackRock, and I talked about this a bit yesterday, went from being so clean locally, like every bullish divergence played out, every bearish divergence played out, so quickly on these local time frames. Like aggressive longs ended up being a top signal pretty reliably. Aggressive selling, local bottom signal. Aggressive longs, local top, so on and so forth. And that has changed a little bit. But yeah. But the point is, the principles of order flow, what's the logic for not applying them here? Which is just, this whole uptrend is marked by aggressive selling. I mean, in some ways, the order flow looks like fake here. not fake, but like as price is impulsing, CBD is going straight down. Price is just moving up on aggressive selling. It's taking almost no market buying to move up price. So, I mean, what does that quote unquote mean? This is BlackRock, by the way. That there's very little market buying relative to the market selling coming in here, which means there's very little pressure being put on price for it to be moving up like this into this kind of aggressive selling, which means there's very few limit sellers relative to the limit buyers. And there's a lot of market sellers relative to the market buyers. There's really no other way to interpret this, right? I mean, this whole uptrend is just basically selling, aggressive selling. I mean, in some ways, it's almost so strange. It's kind of hard to make sense of. Like this order flow essentially looks like anyone trading at market is selling. There's like no market buyers. But if there's any market buying, it pushes price up. And then there's just massive limit buyers sitting here. Like the discrepancy between, let me make sure I'm on order flow. The discrepancy, just even locally in some of this price action between market buyers and, let's just say aggressive market traders and limit traders is just huge. And if you were to categorize this divergence as important, well, you would expect it to play out with a massive move to the upside. And you wouldn't really even be so surprised. We're just talking about BlackRock here for a second. By the way, this isn't BlackRock buying this Bitcoin. I mean, presumably. They're just facilitating this IBIT ETF here. It's just traders. I mean, obviously there's institutional money in there, but anyways, it wouldn't be so surprising from an order flow perspective just to see a strong move come out of this. I mean, in some ways, from an order flow perspective, it would be surprising just to see this, right? Like what you'd have to assume here is that all these big limit buyers here just puke and they just can't hold up the aggressive selling anymore, and then they get wrecked in one big candle. Always possible. But they're doing a pretty good job of holding price up here, considering the selling. We don't just have to look at the high time frames here. We can look at the low time frames. that are also building up bullish divergences. Of course, IBIT's closed right now, so there's a gap there. I would just say that maybe we put more attention on the lower time frames, of course, for entries. There's bullish, this is bit by bit, there's bullish divergences developing across this range, which it's hard not to think back to the days when something like that across 10, 15 days, a flat range here, big bullish divergences, choppy range plays out into a big impulse over and over and over again. And that makes sense, right? I mean, you just have, this is back a few months ago, first at 50K here, and then in this area. Makes sense. You have super aggressive selling coming in here, price just trading sideways, that ends in a big impulse. Same here. I mean, this is where order flow is just incredibly clean, supporting. This is that where I showed you had the big aggressive move up and then just a choppy uptrend with order flow just supporting higher lows and long ideas the entire way up. With some pretty big bearish divergences on IBIT forming here. And just a simple range idea for a short here on Bitcoin, which, you know, in some ways it's kind of amazing to have gotten that short, targeting all these lows being run back down to 60K. But again, you know, these bullish divergences, big part of the thesis from this golden pocket long, playing out for a move to the upside. But really since here, all that's been happening is just massive bullish divergences into bullish divergences as price just runs lower and lower and lower into this region and now into an uptrend, kind of flat CVD, with the only kind of local bearish divergence that looked really significant right around here. And again, just bullish divergences, similar to IBIT. The only way these form is if there's many more aggressive sellers than there are buyers. Price is going sideways, CVD is going down. And the reason I'm just talking through all of this is, you know, what's the case here for ignoring the order flow as part of the thesis? I'm not saying that it's the only reason to have a long, but could it be considered part of the thesis on Bitcoin here as we trade above the middle of the range? I think so. Even here at the lows, we have increase in open interest on this candle, but like 10.8 million, 7.9. It's just locally on the 15-minute chart. 7.7, 8.9 million. Lots of puking here. This candle here, an increase in open interest. So some aggressive shorting coming into this candle, giving us a bit of a bullish divergence forming. Yeah, so reading through the chat here, Love Xlux says, I think a lot of people expect 64K-ish to be tapped at some point. I mean, in some ways, I could say I expect it to be tapped. Back here, back here, a month ago, these were kind of the simple ideas that I thought there would be to trade, which was 64K. And at the time, I was just projecting a GP. Like, this price action didn't exist, but I could imagine the idea of price action that gave us our GP here. And the idea of like, hey, these are probably going to be simple high time frame trade ideas. That's why I named the folder a month ago. And that's just trading a sweep of all-time highs and down at 64K. And even when I made the video for the long here off this point of control, and the reasonable idea that I thought it was, I said that I just can't justify not having a long here, even though I probably just lean towards price moving and tapping this liquidity. And I would almost say that I have the same perspective in a way. It's sort of, I probably lean towards price coming down and taking this. Like, why not? Why not just wipe out all this liquidity? But even so, can you justify not longing into the idea of just holding this up, bouncing off the middle of the channel, off bullish divergences, and coming back down later? Because there is kind of a clean idea here, and I know I've been pulling new levels. Obviously, some of this needs to be adjusted. I drew this out a while ago. Hold on a second. I'll just pull this up here. I don't actually have that scene on. We'll just look at this as a, but this was my high, in the high time frame Bitcoin channel. I drew this out a while ago before this initial impulse, and we've been ranging here for a month. This idea of taking the highs and then forming to some kind of triangle. Worth noting, our POC used to be a line down here as well. It shifted a little bit. Still a high volume area there. But what's kind of nice about an idea like this is you do end up taking this liquidity. Come up into all-time highs. Our GP's aligned here. And then it also just sends us into a choppy range maybe for another month before continuation. So there's certainly ideas here where you get this level taken and all this liquidity, but you do it after a rotation to the all-time highs. But you could also just take it now. Okay, let me just scan through some comments here. Someone asking, do you mark out the 2021 high or care for it? Yeah, I did mark it out at the very beginning when I did the monthly time frames. We have our, I didn't label this, but that's the value area high on the monthly chart. But we have our old all-time high here. We have some monthly candles stacked up. There's actually 4 of them up here. Monthly candle to the downside. Well, I'd say this, it's not hard to imagine that there's a lot of liquidity up here, right? I mean, we have a series of highs. This is basically a double top. And if price does run these highs, you can imagine a lot of shorts getting stopped out, breakout longs, and we just have our deviation. The range low, deviation, the range high, deviation. I'd personally be looking for something like this as the first primary higher time frame idea. But you could also rotate to the lows of the range. On the flip side, well, it's not hard to imagine on this medium time frame that there's more liquidity under these lows. This could be a nice spring. If we break this down, there's no structure here, so it's not hard to imagine price just teleporting back to the lows of the range. I think the levels are quite clear within the context of this range. I mean, the structures here, you have structure here that could get lost, you have structure here that we could break out of, and then you have the range lows. Range highs, middle of the range lows, and structure built around all 3. Does anyone think, so I'd just be curious, I mean, it's going to be kind of hard for you to explain your thesis, but does anyone here think that it's unreasonable to be looking for longs, to be trading longs off of this kind of middle of the range area towards the highs of the range? Let's just say that as like the primary thesis. I'd just be curious to think if you think this kind of region is suspicious for longs targeting all-time highs. Let's put aside whether you think price will go higher or lower. Just kind of curious to see what people's kind of impressions are. Someone says 70K, no man's land, 62 to 65,500, decent. Calculated risk, big liquidity at 48 to 52K, but that would be, that's the only thing. Does CPI, FOMC, PPI, etc. affect how you trade? No. Like the outcomes of those news events don't. I think those events can certainly generate volatility and catalysts and triggers, but ultimately still looking to trade around technical levels. I would say that if those events have any effect on how I trade, it would be more so that you're just expecting the levels to maybe come quicker, targets to come quicker, stop losses to come quicker. I mean, in really volatile environments, that's kind of the case. But I think still the technical ideas remain the same. I think that price action still behaves technically during those kind of events. You know, the thing about technical analysis is just, I mean, at its core, until you get into, I mean, there are technical things that are trying to predict the direction of price in the sense that, like, something like Elliott Wave, for example. And but all you're trying to do is structure a trade with technical analysis at its core. So the idea would just be that, well, I'm long here. These are the important levels. These are the important levels to the upside. These are the important levels to the downside. And at its core, identifying something like support, let's say, you're not saying that, oh, price is going to hold this support is so good, it's so strong. You're just saying this is an important technical level, and what I'm going to use it for is to structure my trade. So you might just be saying that, well, I'm going to be long until this level's broken, and that's my invalidation. Like, this is my structure. You know, if we break down, I don't want to be long anymore until I see signs of strength, because, you know, let all this get tested, and I'm not going to be long in here because there's no technical setups. And then if this comes, I have the range low, so I'm going to be long as this is holding. And that gives you your invalidation, which allows you to structure your size. And then your targets could be for a TP1 off something like this, back to the middle of the range, back to the point of control, and then the highs of the range. At its core, technical analysis is not really something you'd use to predict. Like, for example, you put on a long at support, you're not like, what the hell happened if support breaks? You put on a short at resistance, you're not in shock if the resistance or support breaks. You're not confused how that's possible, because isn't this line important? Isn't the POC important? Isn't the 382 important? It's just giving you a way to structure a trade so that it has asymmetric risk reward and invalidation. Someone asked, how much has Zoran's bear posting influenced sentiment? Are you just talking about my general sentiment or my sentiment? I'm not sure. I've seen a couple of his posts pop up on my feed. I mean, at the end of the day, there's always going to be bearish analysis, bullish analysis. Everyone's going to have their bias based on those. You can always find somebody. I mean, in just the general sense of price going up or down, it's kind of 50-50. Like, for every person that says price will be higher a week from now, there's somebody that will say price will be lower a week from now, and half will be right. The tricky part is how it gets there. I mean, yeah, I don't know. Somebody says in general there's a bit of a cult behind him since he shorted 72K. That's kind of I don't know, maybe. Is it that? I mean, I literally shorted this, targeting this, and I didn't get a call. I longed like every pivot low. I shorted this. Basically called this price action exactly. Actually did have this exactly as my short target as well. I longed into this. I did short this wick, but I closed it on the minor retracement. It's going to be a bigger hedge. But anyways, I don't know. I guess he's making a lot of noise. I actually just noticed today, like, I didn't even check if I follow him. I'm like, I've seen like 4 of his posts pop up on my feed. So maybe he does have a cult. I think he's just having fun with it too. Man, wouldn't this look like, I mean, this could make a lot of sense. But wouldn't this look like a weird major high? If we just nuked from here. Let's see if we lose the middle of the range. There also is kind of just an ABC flat idea here, right? Like, without getting into the higher time frame ideas here. If we wanted to call this five waves, well, why not just call this a flat? It's really a perfect flat. Perfect regular flat. That's another thing I'm looking at. Somebody mentioned that you know, with this level getting tested so many times, it's makes them less interested, or maybe a little more suspicious of it. I forget exactly how they just worded the comment, but I would kind of agree, although I think this is fine. I think really double tapping this, you could maybe call it a triple tap, but you know, this is a B, C for wave 4 into wave 5. I don't think there's anything wrong with the looks of this, but maybe you don't want to see much lower. Yeah, sometimes I do just like to look at the chart, just to like see what stands out. So if this is, let's just say this is our completed flat for wave 4. Well, just assuming it is, we really shouldn't see price come back down below it. We should start to see trending price action. I mean, if you want to call this the start of a wave 2. So if that's our wave 2, then you're kind of looking for the bigger wave 5. I mean, 3 waves here. Like, be something like that. Let's drop the time frame here. Be a pretty deep wave 2. Not quite the 786, but close. Maybe look for the shallower wave 4, something to come retest this. I mean, a bigger move up here. Do I still have? I do still have the cipher harmonic here. This is another older idea. So like maybe the bigger move up here would align with the cipher harmonic up into that kind of 80, 81, 82K region. Looking at the XAB at the 50% retracement from X here. Get the cipher up into this 81K and then just a big sell off. Take all these lows out at 50K. I shared this a while ago. Just something I've been looking or wanting to keep an eye on with the bounce here from the 0.5. Be hard to imagine there would be anything. There's a parallel structure there. I mean, something like this would be really nasty, right? Like, well, for a lot of people. I don't actually think it would be particularly hard to trade. You'd have essentially a short trigger here that doesn't go very far. Let's just drop this in here. So you'd get the sweep of the range highs, you'd get the rejection, only to just get something like a retest out of this, maybe aligned with the shallower wave 4, 382 after the deeper wave 1. Then impulse, this is going to just destroy so many people, a move up to 80K. And then a big sell-off into this 50K region. I mean, that would just smoke people. But again, I don't think it would be very hard to trade if you're prepared to put on some risk up here short. Be nice to have longs up into the idea as well. And then this would end super bullishly. A lot of ideas when price has been ranging for 100 days. Yes. Somebody says, can we see the monthly and weekly folders? Let's turn off the cipher. Actually, let's leave it on for 1 second. Would you look at that? Cipher target also aligns with the POC, the D leg. Obviously, monthly candle highs up here, old all-time high here, monthly candle lows, major 382, major golden pocket. Could drop the minor fibs into here. And the weekly time frame. Weekly candle lows. Weekly candle low here, 382, weekly candle highs. I didn't mark these out again, but the monthly candle highs are weekly candle highs as well. Yeah, I mean, so my goal with this kind of just sitting and charting here and talking through things and isn't necessarily to change my perspective, just to be open to it. And I guess my view here is that it's not really reasonable to have a bearish bias here over a bullish bias, at least not to the degree that it would stop you from putting on longs. That's my perspective. Like, even if I thought it was slightly more likely that price come down and even test some of this liquidity and could see what happens there, even at slightly more likely, let's even say 15-20% more likely, doesn't justify not longing into this. Because even if you just structure your longs here with, you know, stops placed underneath, and you're just targeting right at all-time highs, underneath all these lows of 382, you're 4-1, 5-1, 8-1 for a deeper breakout. So if you're getting paid 4x your risk, place it wider. Even if you put your position very wide and tried to account for deeper below this wick, could still argue it's reasonable. I personally wouldn't prefer to trade it that way. I always prefer just to trade everything separately. Yeah, I don't really think I don't really think there's anything here that I'm seeing that really changes my perspective. If anything, I'm more bullish after walking through everything again. Maybe that comes back to bite me, but I think it's reasonable. I think it's reasonable to be bullish here. Start getting pretty cautious if price starts breaking this down, knowing that there's just the potential of a liquidity sweep. More optimistic again if it gets reclaimed, and just have to accept that the range lows are probably likely if we start breaking this down. And I guess I also have a little bit of a bias that we're not so likely to range here again for the next month. So if I don't think it's likely that we're going to range here for the next month, and I lean bullish while price is holding up here, then my bias also kind of implicitly states that I'm still looking for a move to the upside here locally over, let's say, the next week. And given such, it makes sense to me to continue adding to longs, not up here, on retracements, right? Local structure, keep an eye on it. And that might not end well if we continue to range. But yeah, I think it's still reasonable, so. And just skim through the comments real quick. Someone says there's a rejection already in 67,000 now. 67.6K, bro, same as yesterday. Someone says it's interesting that fear and greed is at 78, up from yesterday, but CT is bearish. I would also take your assessment of like sentiment with a grain of salt. You know, there's so many. I mean, I have no idea how the algorithms work, but there's one. It's kind of hard to. You don't see everything, so it's hard to assess everything, and you're kind of shown, like, everybody has a different feed. Everybody's in their own bubble. It's like where one person might be seeing only bearish things, and other people might be seeing only bullish things. I've also seen some things that kind of suggest that everyone sees different comments, or can see different comments. And so, in a way, it's possible that you're kind of fed a bias, right? Like, let's just say, for example, all you do is interact with bullish charts, maybe, I'm simplifying an algorithm, then you might just be more likely to see bullish things on your feed and vice versa. But, I mean, you can maybe get a general sense. But yeah, I guess for me, probably the last thing that I would ever personally rely on or consider is something like, oh, you know, I'm going to do all my analysis or whatever, but I'm just going to go see what I think everybody else on Twitter is doing and make a decision based on that, because that I just don't think it's going to be very reliable. It's so easy to just introduce my own bias there. And really what I'm trying to do here, even on this live stream, is just working through the ideas, right? Like, the alternative would just be me saying, I don't know, guys. I mean, I think price is going to go up, and I think that things are going to get really crazy from here. And someone says, why? And you say, I don't know, I just got a feeling. Well, that might not. Some of those ideas might not have the soundest reasoning if you can't articulate any of them. And so I think working through the logic of the idea is important. Also in an ETH long here. Just hovering around entry. Idea here just being a range, deviation, retest. Maybe we come and rip through this trendline liquidity. Maybe we don't. Maybe we see some of this grinding, trending liquidity get tested here on Bitcoin on the lower time frames. Maybe we don't. But of course, there's always going to be somebody with a different perspective. And so one of the things, like, I'm sure everyone experiences this in their own way. But let's just say you have, 50,000 followers on social media. Anytime you have an idea that doesn't work, there's going to be not just someone, there's going to be thousands or even tens of thousands of people with the opposite idea every single time. So if I just say, like, this is my thesis, I'm bullish here, there's going to be tens of thousands of people that will think, oh, I have the opposite, you're going to get wrecked, you're going to get stopped out. And so I'm always going to hear from somebody why the idea was bad, but almost most of the time in hindsight, it actually is funny, because sometimes I'll get, sometimes somebody will say, oh, that's a terrible idea, you're about to get wrecked, you're going to find out. And the idea works. And a lot of times I'll go back and it'll be comment deleted, comment deleted, comment deleted. People go back and delete their comments. I guess they don't want to get called out. But anyways, it's really hard to take any kind of criticism seriously in that case, because I could literally do my analysis anyway. And just every time you take a loss, you're going to have people telling you that they were right and they predicted the exact opposite. And it's not just, it could be thousands of people every time, right? So for example, it's just, I can't really take other people's ideas too seriously, because there's always going to be somebody with another idea, because there's just too many thousands of people with ideas. Now, that said, I can like somebody else's idea and even want to trade it. I mean, I'm in a trade based off of someone else's idea right now, and I know they're not responsible for the outcome. I saw the idea, and I like the idea. And some of you guys might disagree with the idea, but that idea is a big swing long on XRP, and I'll continue to look for opportunities to add to it on my own volition. But this is X-Force Global's macro, because even here with a 10% stop, it's like 140 R trade, and willing to put on risk for it. A multi-year triangle. I understand the idea. I like the idea, and if it works, it works. If it doesn't, it doesn't. And I'm willing to trade around the idea while it's intact. I mean, theoretically, if the idea is non-validated, this triangle shouldn't break. I think you could leave a little bit of room for a deviation here. Is technically okay, but shouldn't be more than a certain degree. And then if we start seeing strength from here, well, I'm probably going to keep looking for tighter invalidation setups. And if the whole idea plays out, well, I could end up with a monster position. And that's, I mean, I understand that's on me. But anyways, the core idea is not mine. Well, yeah, so someone's saying certain traders, they call people with different takes clownish and call traders who are bullish here stupid. I mean, I have no problem, I guess. Somebody saying it's stupid to be bullish here. Like if, I mean, I don't even necessarily consider that I'm bullish here. I'm bullish while this support is holding, I suppose, but I think it makes sense to put on a long, even if I think lower is more likely, because it has to be way more likely to offset the asymmetry of longing into these ideas. It's sort of like pot odds, if you know anything about poker. Like, for example, let's just say that a pot, maybe you're playing with $10,000 behind. We'll make an extreme example. And you've been playing, maybe you've been chasing a hand, and maybe you just have a low pair, let's say. But somehow the pot ballooned to $99,000. And you see there's so many hands out there that beat you. But the pot's at $9,999, and you have one chip behind. Let me restructure this. You have 10,000 behind starting the hand. You're all in except for one chip. The pot is at $20,000, and you see that the only thing you beat is a bluff at the end. And he pushes, but you've ended up all in coming to the last round of action. And he says, one more dollar to play. At this point, even though you say, I beat nothing here but a bluff, I didn't hit my hand, I ended up, so this is where pot odds come into play, where you say, even though it's such an astronomically low chance that I win this hand, I have to bet one more dollar to play the $20,000 pot. So even if it's a 1 in 20,000 chance that I win this hand, it's EV neutral. And that's actually something you need to consider in poker is, does it ever make sense to sit there with the $20,000 pot and know you missed your hand and you only beat a straight bluff? Maybe you only beat an ace high or whatever it is, and the pot. Does it ever make sense to lay down the hand at the end and not bet the extra dollar, even though it's astronomically low chance that you lose? And that's sort of this idea here. I don't think it ever would make sense. And then say you lay down the hand, you say, I'm going to make the fold. I'm not putting in the extra dollar. You take the $20,000 pot, and he shows you a bluff. How many times do you have to play that hand and make the decision not to put in a dollar for it to be a good decision? Well, 20,000 times. You'd have to find yourself in that position 20,000 times and be right 20,000 times out of 20,000 times to make that an EV positive decision. You only need to hit that bluff a very small percentage of the time to make it always worth calling the extra dollar. And this maybe this is a crude example of how this works, but at some point, the only consideration in your head can't be what you think is more likely, because that's not the full equation. Sometimes you have to bet the dollar, even if you think it's unlikely, compared to another outcome, because you're not getting $1 back for every bet, right? So you have the pot odds to call. And the way that would maybe be described, it's very, very, I mean, so many things about poker are similar to trading, but you could you could say, I win this, 25% of the time, but I'm getting 10 to 1 on my money. So you play it based on pot odds. And at the highest levels of poker, these are the types of analysis they have to do, because they're essentially playing like almost a randomized system. So there's no really read on what they have. Like, they have ranges. There's a probabilistic idea that they could have anything in maybe certain ranges. And they maybe make plays to like mask their range or broaden their range. And so when the best are playing the best, these are the types of calculations they have to do and it can't just be like going off of your gut feeling, right? Like, I think in professional poker, gone are the days where you can just be like, you know what? I don't like the way his eye's twitching. Of course, there are some great players that have great personal reads on people, but even those players would say that that's not really the foundation of their playing. But yeah, like, so for me, for example, like, I didn't short this. And so one of the reasons I'm on this, doing this session and on this live stream is I just really want, like, there are many times, we'll just say, over the last several years where I'm just so dialed in to price action. Like, every pivot, I'm playing it pretty well. Let's not say perfectly. And I guess there's times where I just kind of feel like a little out of sync maybe, or just not perfectly tuned with price action. And I think it's important to just step back and say, like, am I making reasonable decisions? Because on one hand, I have to accept that everything has a probabilistic outcome. And so it's never going to be, you're never going to just hit every trade perfectly, because there's no system that's going to generate that. You can be very consistent. But sometimes you might find yourself almost just without even realizing it, especially maybe in prolonged, long ranges, or really choppy price action, just sort of developing a bias that's not very sound. And I think it's important just to step back and challenge some of those ideas and walk through them a little bit. Because for me, at the end of the day, I really don't care. Like, if I'm long here, I really don't care if the trade loses, if I am comfortable with the idea that I made a reasonable decision. I'm okay to just say, you know what, I bet on heads again. That was my asymmetric bet. That was my EV positive bet, and it didn't work. What am I going to do? And of course, I need to come to that conclusion before I know the outcome, right? I need to say, this is a reasonable decision before I put on the trade, because I don't know what's going to happen. And you never want to find yourself in a cycle where you're saying, I like this trade. I'm going to put, this is great. And then as soon as it doesn't work, you say, I should have never taken that trade. That was a terrible trade. What was I thinking? That's a terrible mental cycle to get into, because you're essentially just doing the, hey, I'll give you $2 every time it lands on heads. You give me $1 when it lands on tails. So you just always bet on heads because it's always this reasonable, smart thing to do. But every time it lands on tails, you go, I should have bet on tails. What was I thinking? And so, yeah, you just want to be careful about sort of how you're interacting with the with price action psychologically. Because a losing trade's not a bad trade. Losing trades are perfectly reasonable all the time. Someone's saying, looking at alt charts, they all are looking doom, bro. Yeah, I agree. I would actually say that there's so many alts. I think I've brought this up a couple times over even the last week or two. I mean, I think every single one of my alt charts, well, this is an exception. This was an altcoin request on render. Is looking for lower. I mean, yeah, I've commented on this a couple times. There's so many alts that just look like they want to. This was demonstrating some PA. So many alts that just look like they want lower. And I would say that, yeah, most of the alt charts I have, I am just waiting for lower. Some messy charts that Sol, Phil, say. I mean, even waves, drew this out yesterday, maybe coming down and forming a descending trend line here. Come and run these lows and look for some tight invalidation. Long setups. Yeah, and at some point that's sort of hard to ignore when every alt looks like it wants to see lower. That, well, if all these alts go lower, it usually coincides with Bitcoin going lower, but now it says, can you check Doge, please? Holding from 16 cents and don't know if I should cut. Well, I can't really tell you if you should cut. Oh, 16 cents. What I can tell you is we're bouncing off the GP. Like this, a nice clean intermediate level, pivot low, retrace, sweep the low. A lot of altcoins. I mean, even ETH right now is like sweeping an established low. This is, you could say, critical local support. I guess for me, the big idea I'm waiting for on ETH is or on Doge, sorry, is to finally come and retest these range highs. Might even be able to, and I am actually kind of bullish on Doge as well. But to come take out all these wicks on the daily. I'm not saying this will happen, by the way. I mean, this could just happen. Big move off the GP. So far, this is very clean as a local higher low. But I think it'd be cool to trade something around this. Come and retest this these previous highs. Run all these wicks. Have that as a spring. But I'd say this, like you're saying, you're holding from 16 cents. What are my thoughts? I mean, my thoughts are that, well, if we start losing this, then, you know, it could look a little bearish, and this is the next important idea. But I think it's really important to have your trade plan before you take it, right? Like, you should know where and why and when you're going to cut your trade and how much you're going to lose before you enter it. In my view. And that doesn't necessarily mean that it's like a level of my stops here. Like you could size it in such a way that there's a little bit of discretion in there and you let price action play out. But yeah, I can't really tell somebody, like, what am I supposed to say really to a question like that? Because I don't know anything about your position. I don't know the size of it relative to your account. And even if I did, I don't know what's going to happen. I can identify key ideas for support, resistance, ideas I'd like to structure trades around. But like I'd be interested in longing this, but I also accept that if we don't reclaim these wicks or hold them as support on this retest, that this could just happen, in which case I have to be out of that trade and accept a loss. Can I check Q and T? That's a member request here, so we'll fire it up. Right at the GP. Some range lows on the daily chart. Having rejected from the 618. Maybe barely front running. Not a ton of price history. It's really got that grindy bearish structure here. Already up about 10% from the lows. I mean, this little like wick into the 618, taking this wick, would have been a nice little sniper entry. Reclaiming some of these lows. Yeah. I mean, certainly at just structural support. That's how clean some of these downtrend ideas. Kind of have a grinding downtrend on the 1 hour here. I don't know. I mean, yeah, I think for me it would just be like, there's probably reasonable ideas to put on some risk around the GP. Price is still grinding in a downtrend. Maybe it could be relevant to run these lows again. Come break out of this downtrend. Might be okay to structure some trades around this, or even maybe try to snipe into some local ideas, but structure some trades around the daily candle lows here into the GP. Alternatively, there's probably, depending on how long we stay down here, like if we do something like this, could be some cleanish ideas, just trading around a breakout of this descending structure and being pretty cautious if this flips to resistance. And why not just run to all-time lows? Not a lot of structure here, so relevant structure I think kind of clear here. And I mean, it's not really like we could look for examples of similar ideas that have worked. Obviously, there's just an asymmetry of the risk reward here, but I mean, there's almost the exact same idea on this chart already, which is you could say that this is kind of the structure here is very similar to how this played out. Just kind of had this grindy downtrend. On multiple time frames into the lows. Take the lows and then break out of the grindy downtrend. So anyways, I think my basic thoughts here would just be how one might structure a trade here seems relatively clear, which is just continuing to range here would be the long idea, and where you might not want to be long is if this all flips, so you kind of have invalidation. But I would be, you know, like if I'm going to be diving in and trading these random altcoins, for the most part I like to be a little more precise with the entries. Like this is kind of a cool little snipe idea, and maybe retesting that level could be interesting as well. This was actually a pretty clean local GP bounce too on the 5 minute low to high. Take this low. So I mean, it's really the same idea, just on a lower time frame. Trading into this GP. This is probably the GP. A little higher. Yeah, it just depends on the time frame you want to dive in there on. The Doge chart I shared seems like a flat from the bottom, is what somebody's saying. Yeah, maybe. I look at I think there's a pretty, I'm not a fundamentals guy, but if I had to put my money on the fundamentals of any altcoin, it would be Doge. Maybe that's controversial, but I think it has the strongest fundamentals case. Can I check INJ? You don't think last year's prices will ever get touched again? Maybe. I'm not in the short anymore, by the way. I took it here, but removed the risk. Yeah, I don't know. I mean, right for now, I'd like to see lower on INJ for new swing trades, but might not get it. It's trying to kind of ramp up here. But my major target's around $14. I'm kind of surprised that you don't see more noise about the fundamental case for Doge, actually, to be frank. Because it seems like clearly one of the, I mean, to me it seems clearly one of the strongest long-term use cases, which is Elon Musk is obviously a big fan. Maybe has expressed some interest in utilizing it in some way. He's also expressed interest into turning Twitter into a payment platform similar to WeChat. In fact, PayPal, his first company, which was a payment processor, payment platform, used to be called X. That was the initial name of PayPal, was X.com. He's renamed Twitter X, and it wouldn't be hard to imagine Doge being integrated in some kind of meaningful way as a part of that payment processor. And you have one of the wealthiest man in the world with one of the biggest social media platforms in the world planning to turn it into one of the biggest payment platforms in the world, expressing interest and affinity to Doge. Doesn't mean he can't shift his perspective or move away from Doge, but for now I think there's a pretty reasonable bet on all of that coming to fruition and Doge doing quite well. So that'd be my fundamental case for Doge. I don't really have a fundamental case for any other altcoins, to be fair. And that one I didn't spend a lot of time thinking about, other than just, I know that PayPal used to be called X. He renamed Twitter X. He expressed interest in turning PayPal/X into, Twitter/X into a payment platform. And it's not hard to imagine a future where Doge is integrated in how transactions are taken care of and how even maybe creators are compensated. But we'll see. You would think it would be bigger news for a meme coin. Like, I don't know. It's just kind of funny. Like, you have all these random meme coins, but you would think it should be big news that it's not just that he's the quote unquote wealthiest man in the world, and he actually has platforms that in some ways you could argue that he has the capability to make Doge and has expressed the interest to do it. Now I'm going on a fundamentals rant. The most practically usable altcoin or cryptocurrency, more than Bitcoin. I mean, the use case, at least as a means of transaction for Doge, and the reason that some people might actually have it to use it, would be better than any other cryptocurrency, just on the face of that kind of idea. And if there was even an inkling, like say Zuckerberg came out and said, hey, we're going to create a payment platform, turn Facebook into a payment platform and use Pepe. I mean, I think that'd be news, but anyways. Well, yeah. So somebody says, I mean, they might have commented that before my rant. They said, I don't know, man. These cryptos except Bitcoin look like trash. Looking to fundamentals, what does this altcoins are generating actually? Who is using these coins in their lives? That might have come before my rant, but yeah, that's the point, right? What crypto altcoin are people actually using? Everyone's speculating on them. But because of the relationship between Elon Musk and Doge and his stated intentions to turn Twitter into a payment platform, and it wouldn't be hard to imagine it coming very quickly one of the biggest payment platforms in the world. It's really the only random altcoin, and it happens to be a meme coin, that actually has a feasible use case in the foreseeable future. Just kind of by brute force. And if it's integrated properly, it could be relatively straightforward to use. Well, that's why I said he could change course. So somebody says, why would he not just create his own coin? He may, right? But, you can go back and look at what he's had to say about Doge. He's, again, let's just not make it any more different than the probabilistic nature of technical analysis. I mean, if he'd already done it, then it wouldn't be a thesis. It would just be a fact, right? There's a reasonable thesis that he might do it, but he might do many other things, right? He might say, you know what? I've decided I don't like Doge anymore. I don't think it's the coin of the people. I'm going to create my own coin that solves all the problems that Doge has, and that's perfectly possible. But yeah, I would just say that most altcoins are vaporware. I mean, even altcoins that are kind of sound fundamentally, like there's some reason that you might use them and it's kind of a good idea, are also just nobody's actually using them. Like the vast majority of people, let's not say nobody, but the vast majority of people are just speculating on the altcoin. It's sort of like all these AI coins, right? Like this coin's AI, this coin's AI. It's not to say that these coins typically aren't associated with projects that are like the next open AI. They're going to transform the world we live in. It's really just a buzzword. Like there might be some adjacent AI technology, but it's not like these coins are going to be ubiquitous in the world. And so, obviously I'm not going to just take random trades on Doge with that thesis, but if somebody asked me to hold any altcoin for the next 5 years and just buy and hold it for 5 years, I would probably choose Doge. I'd say it has there's the strongest case that it's going to be utilized and used simply from the Elon Musk connection 5 years from now. Whereas ask me about any one of these other random altcoins 5 years from now, I couldn't even begin to imagine what those futures look like.
like there's just something so silly about it all in a way. It's in terms of like long term. I mean, you're basically betting on long term speculation on price going up and people wanting to buy and buy and buy and buy to sell to somebody higher, and that just going on forever. Because it's just there's literally like a million altcoins, and you can just create a new one every day, and probably the thing that's going to make any one altcoin stick around is the degree to which it's actually utilized by somebody who actually has a working platform to utilize it in, right? So it really doesn't matter how much better or worse certain altcoins are in some grand sense. If Google or Amazon or Twitter or Facebook or any major platform picks up a coin or creates a coin and integrates it wholly with that platform, it's going to have a use case built into the fact that it's being, you need to have somebody adopting it in some usable way, right? And I understand people, adopt an ecosystem to make NFTs or whatever, but I don't think that's the long-term future of altcoins. So someone's saying, looking at Bitcoin weekly time frame, it could easily be finished 5 waves, and now we are correcting. You'd have to. I don't know if you're in the Discord. You could share me your charts there. I don't know if I agree that it's easily 5 waves. It's possibly 5 waves. I just don't know if it's actually the most likely interpretation of this, but it's possible. One. Here's where we're at. Deep wave 4. This got flipped. I do still think that wave 4 could possibly be developing. We'll see. Well, maybe I won't sit on here much longer. I don't know. Just kind of been hanging out for a little bit. I mean, on the weekly time frame, we obviously need to hold up some support here. Just kind of doesn't look ultimately so bearish. For just, oh, that makes sense. I mean, we have a range. Price kind of breaks up through the middle of the range. Range is here. Retest the lows of the weekly candle, the weekly range, and then just impulses, and that's the 382. I mean, this would just be the least surprising bullish continuation in the world. It doesn't mean we have to bounce from here, but this just wouldn't look strange at all. It doesn't look bearish. It looks bullish until we break down. So those are my thoughts. I've made my case. I've made my case why if price starts trending up here, I'm going to get stopped out of potentially some portion of longs. I'll probably trade some of, like if we start getting a strong uptrend, I'll look to add on retracements into these moves and continue to do so and hold some of these as swings to all-time highs to get tested and cutting partial positions. And so this live stream will be the document for why if
some of this starts happening, I'll have round tripped a lot of profits. Or taking longs that didn't work.
I don't know anything about Chronos.
I'll end with this. Somebody said, what is open interest saying? I'm assuming you're kind of saying, what is order flow saying? I mean, this is just technically signs of bullish absorption at the lows here. Some aggressive selling coming in here, increase in open interest, some aggressive shorting coming into these lows. Here, aggressive shorting coming into these lows. And even here, a little bit of local absorption. Doesn't really mean price has to go up, but I mean, all it's saying is that there's some more aggressive selling coming in here. Some limit buying, holding it up. That is indeed just a fact, I suppose. Whether or not it plays out, we'll see. All right, guys. Well, we'll see what happens here. I mean, also just have to look for, this kind of can always be the frustrating thing here. At some point, let's just say this level's relevant. I mean, maybe we just come back down and retest it. Maybe we come down and retest this level. At some point, if price does bounce from here, it's just going to bounce. And it's going to maybe put on in some kind of higher low. And then it's not going to revisit the level, right? I mean, here's an example of 1, 2, 3 big wicks into this same level. Eventually, decent move out of there. Lower time frames. I mean, if we go to the super low time frames, we didn't actually take the lows here, but just testing this level over and over, and eventually just moved away from the level and never came back to it. So if this level holds up, who knows? I mean, obviously, the next idea that you have to look for to the downside is that we don't put in a higher low. The bullish divs don't hold out. We just retest the same level. And if we break that down, the other idea is just coming and taking these wicks into the golden pocket. So we'll see. But we have our major 382 here. We have our point of control in this region, the middle of the range. We've gone all over that. So we'll see what happens.